All right, hello everyone. Another Friday workshop. Looks like I know just about everyone in here. Bob, Charles, Greg, Jim, John, Julie, Larry. All right, you guys, here's what we're going to do. I'm going to show you how to work with this pivots indicator. Now, the one that comes with Ninja, let me just kind of add it. I'll add it over here on the left. This is the standard pivots indicator from Ninja. So you have the option of basically adding a separate data series from the daily chart and calculating the high, low, and close from the daily bars. That works fine visually. And I've discussed this with Zach. I can't remember exactly what the actual issue is, something with adding in a higher time frame or another data series. But when you're using this within a strategy, you have to calculate the pivots from intraday data. All right. Now, if you're using CQG, then for the futures contracts on the daily bar, CQG is actually loading. Let me just kind of prove that to you now. CQG loads a daily chart with only the regular trading hours, according to the specifications of each contract. Let me just open a daily chart here and show you what I mean. So I'm going to open crude oil daily. One second. Here, you can see. So you see the major gaps. That's because it's not showing the data on the daily chart after 2:30 p.m. Eastern, which is when crude oil closes. It opens at 9 a.m. Eastern and closes at 2:30 p.m. Eastern. So you're not seeing any of the data before 9 a.m. or after 2:30. All right, that's the way CQG loads daily bars. Now, if you're using Kinetic, it loads the entire electronic trading hours or the electronically traded session. So if you're going to calculate the pivots, inside of BloodHound, like I just said, you have to load. Let me just load this to the chart. You have to set it to calculate from intraday data, okay, to be able to for it to work properly inside of BloodHound or a strategy. So if you're calculating from intraday data, then it's going to take the highest high, the lowest low, and the close from the session that you've defined. All right. Now with NinjaTrader 7, we have the option of defining custom session templates. And I'm actually going to build one for you. I know a lot of times we don't really go into NinjaTrader support or teach you how to deal with NinjaTrader, but I think this one thing is important, so I'm going to spend about 3 or 4 minutes and show you how to do this so that you can actually know what to do and know how to work with these. And this indicator that we're using is one that was available on Big Mike Trading Forum, and the author Harry has let me put it up on my site so that all of you can download this for free. All right, and this indicator actually allows you, it gives us the pivot points, not only the pivot points, but it gives us yesterday's high, low, and close, and also yesterday's value-weighted average price. So what was the value-weighted average price at the close yesterday? And then it also gives us the central pivot, which is the 50% point from yesterday's high and low. All right, so what you can do is you can define which session you want these pivots to be calculated from. So think about this for a second. If we're looking at, let's say, the ES or the TF or the NQ or the YM, right, the U.S. equities futures, what do we want to use for our session to calculate the floor trader pivots? We want to use the regular trading hours because that's what most people use. All right, we don't want to use the electronically traded hours, especially if there's a different high. Let's say a higher high in the overnight market and a lower low in the overnight market. Then the next day our pivot points will be totally different than all those people that are using the regular trading hours. So in order to calculate from intraday data, because remember we have to set this rather than daily close inside of BloodHound, we have to set it to intraday close, and then rather than calculating from the daily bars, we have to calculate from either the RTH or the ETH. So I'm going to set now the regular, this is, RTH stands for regular trading hours, ETH stands for electronically traded hours. So we're going to use the RTH. So what I have to do now is define that session template. I know this, maybe sounds complicated, but it's really not at all. Once you see me do this, this will all make sense. Just know that the pivot points, especially for U.S. equities futures, need to be calculated from the regular trading hours, from 9:30 to 4:15 Eastern, or, and since they're traded at the CME, 8:30 Central to 3:15 Central. Okay? So what we're going to do now, quickly, is develop a custom session template. So all we have to do is go to Tools, Session Manager. Here's the Session Manager. Select New. All right, and we're going to name this one CL Custom. And quickly, let me just show you so that you can download this indicator. So I'll put this link in the chat box so you guys can go here. It's free downloads, NinjaTrader Indicators, and it's going to be the Session Pivots indicator. And you can just go here. That's acting funny. Huh. I got to get in there and fix that. All right, so it's in here somewhere, the Session Pivots indicator. There it is right there. So just click on here and download it, and then you can have free access to it. So let me post that link in here for you guys. There you are. All right, so now we've started. We've named the session, custom session template, CL Custom. All right. So now we want to add it, and Eastern time, because well, you can set this, to whatever you want. If you want to use your own time zone, just make sure that the hours are associated with your time zone. But since this is traded in Eastern time at the NYMEX, excuse me, we'll use Eastern time. So I'm going to set this to Sunday because it opens at 6 p.m. Sunday night. Right, that's the start of the electronically traded session, and then the start of the actual regular trading hours is 9 a.m. Monday. So that's starting Sunday, 6 p.m. at night to Monday, 9 a.m. in the morning. So then I add another one from Monday, 9 a.m. to Monday, 2:30 p.m., which is when crude oil closes. And then I can just right-click on this now that I've built this main regular trading hour session. Right-click on that. Add Monday through Friday. You see that? So now all I have to do is select from 2:30 to 5:15, which I'll do now. So Monday, 2:30. And the point of this is so that you can see the entire length of the chart. You can see, the whole 24-hour session, but then you can use this pivots indicator to access just the session from 9 to 2:30. So the pivots will be calculated, and the high, low, and the close will be calculated from this session, this one in the middle right here, this 9 a.m. to 2:30 p.m. All right. So now this part of the session from 2:30 p.m. to 5:15 p.m. is the first part of the overnight. Right. So it's the after hours basically. So I click OK, 2:30 to 5:15. Right-click on that, add Monday through Friday. Right, now I just need to show the overnight. So from 6 p.m., which is when it opens back up, remember it's closed for 45 minutes, starting at 5:15. So from Monday, 5:15 p.m., I'm sorry, we skipped those 45 minutes. We set it to 6, sorry. So it opens back up at 6 p.m. to Tuesday, 9 a.m. So this is the overnight session. Click OK, add it again. Tuesday, 6 p.m. to Wednesday, 9 a.m. Okay, add one more, Wednesday, 6 p.m. to Thursday, 9 a.m. And then Thursday, 6 p.m. to Friday, 9 a.m. and we're done. And that's it. So let's just double check this. We start Sunday night, 6 p.m. That's the overnight session to Monday, 9 a.m., which is the open of the regular trading hours. Okay, and then we have the entire regular trading hours Monday through Friday, 9 to 2:30. Then we have the aftermarket, 2:30 to 5:15. It resets at 5:15. It's closed for 45 minutes. So then we're showing after that, after it reopens at 6 p.m., the overnight session to 9 a.m. the next day. So from Monday, 6 p.m. to Tuesday, 9 a.m. And we just do that for Tuesday, 6 p.m. to Wednesday, 9 a.m., Wednesday, 6 p.m. to Thursday, 9 a.m., and then Thursday, 6 p.m. to Friday, 9 a.m. All right, and that's it. That's our CL custom session template. So we save that now. Click OK. So what we want to do now is right-click on the chart, click on the data series, and set our custom session template here. See, I put it right at the top of the list. So we just select CL Custom, click OK, and now that pivots indicator will be accessing the correct session. And for some reason, my database is probably corrupted. Let me see if I can just reload it and everything will be fine, hopefully. Nope. Isn't that fabulous? Why does this keep happening to me? Unbelievable. All right, bear with me. Technical difficulties. Let's see if the TF is still coming through. Yeah, the TF is still coming through. All right, let me see what I can do here. I'm going to repair the database. I'm going to disconnect. And then once it disconnects, looks like it's going to be okay now. If nothing else, I'll just leave it disconnected, and then we can, build whatever we want. But I wanted to kind of leave it connected so I could manage this sim trade while I'm building this with the pivots. I think this will be an interesting workshop for you guys anyway. I'll show you how to work with support and resistance, and also, show a trade directly from support or resistance, which I think will be beneficial for you. Okay, so let's add BloodHound. Tap the S key, scroll down to SI, BloodHound. Let's add BloodHound to the chart. All right, now, let me just kind of show this. All right, we click on the empty template. Now that we have, let's make sure we have the custom session template. Yes, we do. So now then, let's open BloodHound. And let me just look at this indicator real fast. Yes, we have set it to intraday close. Calculate from the regular trading hours, which is the second session. Now, some people will have a difference of opinion about this. With crude oil, with gold, with silver, now that they've pretty much become, globally traded markets, is it best to use the electronic trading hours, or is it best to use the regular trading hours, or the pit hours? A long time ago, well, not that long ago, but let's say 10 years ago, I would think there were more people using the regular trading hours to calculate the pivot points. But now that you have more and more people trading it globally, they're calculating the high and the low from the overnight market. So, not always will the high and the low of the day be reached in the overnight market. Sometimes it will be reached in the regular trading hours between 9 a.m. and 2:30 p.m. So, days like that, the pivot points would be the same whether you chose RTH or ETH. All right, but when you get the highest high and the lowest low during the electronically traded session, then they're going to be very different. You saw before when I had this set to daily close and calculate from daily bars, S2 was right at the low here. Pivot point didn't move that much, but obviously the range yesterday, the high was put in the overnight market, all right, or pre-market, the high or the low, or maybe both. There we go. So these are the ones we're going to work with today. So let's show, first of all, I'm going to show using the comparison solver. I want to show when a bar is touching this yesterday's volume weighted average price, which is essentially kind of the defined value point of today's session. And you can see it came right up to it and then retraced. That's where I should have gotten out, but I was kind of preparing for this and then waited for the retrace. I'm expecting a much larger move higher today, so I waited for the retrace down to 61.8 right here and bought another one. So now it's creeping higher and all is well. So now let's show with the comparison solver. I'm going to right click, add the comparison solver, and show when a bar is touching this line, this yesterday's VWAP right here. So let's do that. How are we going to do that? We want to access the data points on the bar. So what do we need to do that? We need the SI chameleon. So for indicator A, we want to look at the high and the low of the bar. Right, and this seems to be one of the most common conditions that I build in just about every system that I've built. All right, so SI chameleon for indicator A, high for long, low for short. And we're going to show when the bar is touching or within a tick or two, let's say 2.1 ticks, of this line, yesterday's VWAP. So we're going to add into indicator B now this session pivots indicator. Remember, it starts with ANA. All of those indicators for the free download on my site start with ANA. So it's ANA pivots daily right here. All right, we want to make sure that we set this to intraday close and then calculate from the RTH session. And then scroll down to the bottom and it's the last plot. So that VWAP, yesterday's volume weighted average price, is right here. So that's the one we're going to look at here. And you can see it's not showing that bar, well, because it's actually touching. The high is touching that level. So what we need to do in order to show something, right now we're just showing is the high above the line? If so, give us a long. Or is the low below the line? If so, give us a short. So now we need to show, is it actually equal to? Remember, A minus B, neutral, that corresponds to a range. And that range is this small amount. So A minus B right now equals 0. So that means A equals B. You see that? So now we get both a long and a short because the high is actually equal to that line. I'm going to take that off right there. So the high is actually equal to that line right there. Let me get rid of this. And if I wanted to show, you see this one to the right of it is below it just by 1 tick. So if I want to show the bars that are within range of, say, 1 tick for crude oil, for some reason you need to say 1.1 ticks for crude oil on the TF. So then it is showing this bar as touching that line or within range, within a tick, right? So let's set it to 2.1. So what do we want to do now? We want to isolate these bars on which we're getting both the long and the short output. And I talked about this in our last session. We do that by using one of these function nodes called the long-short modifier. What we want to do, because what this solver is telling us, it's saying is if the long is above yesterday's VWAP, if it's above or within range, 2 ticks, give us a long. If the low is below the VWAP or within 2 ticks, give us a short. So all the bars that are actually touching that line or are within 2 ticks, we're going to get both a long and a short. on those bars. All right, and then all the bars that are below and not touching, then we get nothing but short output, and then all the bars that are above and not touching, we get a long. So we want to eliminate all of those bars on which we get only the short or only the long output, and we do that by setting the long-short modifier to product. Because what is that? Product is multiplication. We're multiplying the outputs together. So think about that. We're multiplying the short output, which is 1, by the long output, which is 0. So 0 times 1 is what? It's 0. And this one, we're multiplying the long and the short together. So the long is 1, the short output is 1. We multiply those together. What do we get? We get 1. So there you go. Now, I just need to connect that. And we've isolated those bars that are touching or are within 2 ticks of yesterday's VWAP. So let's do this. We'll name this high-low to yesterday's volume weighted average price, 2.1 ticks. There we go. So if I wanted to show that reversal bar from the VWAP, yesterday's VWAP, in this case, all I would have to do is add a closing price inflection. So let me show you that condition really quickly. I've just added the indicator inflection solver. This is a very basic solver, easy to work with. All we're going to show is when the closing price is changing direction. So here we have 2 up bars. Closing price is moving higher. And then on this bar, we have the closing price switching from moving up to moving down. That's the bar on which it inflects. So we're going to set this now to closing price. And there we go. So now I have a short condition for this bar. We have a short signal there now. Now then, if we wanted to show, let's do this. I want to show you this because this is something that might, well, I've seen it trip people up sometimes. So let's say there's an area between 2 lines. Let's say we want to show when, let's use the central pivot. The central pivot is yesterday's midpoint. So it's the midpoint between yesterday's high and low. That's what this CP is. All right. The DP is called the directional pivot. It's essentially just the mirror of the CP on the opposite side of the pivot point. So if the central pivot, the CP, is above the pivot point by 5 ticks, that means the DP, the directional pivot, is below the pivot point by 5 ticks. Does that make sense? So it's just showing you essentially when the light colored area is below the darker colored area, it's telling you that yesterday's range had a down bias. So we actually closed lower yesterday, and it's, you know, kind of giving you a bias for the day, although that's not a very good bias. It's just telling you that yesterday's range was down. Okay, but let's say that we want to show when any bar is within this range right here. If any bar is, you know, touching the DP or the CP or is within the 2. So how would we do that? Well, let me show you. So let's first build that condition for the central pivot. And we're going to do exactly the same thing. We're going to use the SI chameleon for indicator A, high for long, low for short. And then the pivots, the ANA pivots daily. Remember, we have to set this to intraday close. RTH and then scroll down and find the central pivot, the CP right there. Okay, this is the high and the low. To the central pivot. And let's copy that one. And this one will be our directional pivot. Everyone see how I did that? I know most of you know how to do this, but when you've created a solver, you can copy that solver so that you don't have to build it twice. So all I did was click copy. It made a copy. Then I go back to the logic tab, right click, go to existing solvers, and add it to the chart. So now let's name this one the DP. Let me select that right below the CP. So that's the directional pivot, right below the central pivot. I believe I may have to change the high and the low. I think I do. Let's see. Yeah, I do have to change them. Okay, let's see. I'll explain this why. Oh, what did I use? I used an AND node. I have to use an OR node. And I'll explain this in a moment. It's slightly tricky. No, I don't have to change it either. Okay, so rather than using a range, which would, only serve to complicate things a little bit, let's not use the neutral amount. So let's use the neutral amount, but let's only say that it can be touching, not that it can be within a range. All right, so it will essentially be signaling all of the bars that are either touching this range from the central pivot to the directional pivot or are within the range. All right, so let's do this now. So the reason I connected the OR node before using this long-short modifier is so that if there is a bar that isn't actually touching one of these lines, let me find a good example of that. A bar that's really just in between the two and not touching either one. For instance, right here. I use that OR node because it's showing me, remember we have in this condition for the central pivot, if the high is above it for a long, all right, and is the low below it for a short. So we're really only getting both long and short signals on the same bar if the bar is touching or straddling that central pivot. All right, so any bar that is above it, remember we're getting a long signal. Okay, so let me just connect this one by itself. So you see on these two bars right here, we're getting a long signal on these two bars from the solver that is showing us when the high is above the central pivot. Okay, and then from this other one, the high and the low to the directional pivot, which is above us here, when I connect that, because the low is below that directional pivot, we're getting short signals on these two bars. So when I connect both of those together with an OR node, we get both the long from this one and the short from this one. So now when I connect those together, all the bars that are touching or are within that range, we're getting both long and short signals from BloodHound. So now to isolate those bars, we do the same thing we did here. We add the long-short modifier. We set it to product. And add it to the result node. So that's how we can show when a bar is touching or within a range. And this could be a range, let's say that could be, if some of you use the large triggers or a couple of different moving averages, you want to show when a bar is touching or between the two, you use this style of setup right here. So this is pretty versatile. I use this on many different systems. So this is very good to know here, this little setup right here. Remember, high for long, low for short. So if the high is above it, we get a long. If the low is below it, we get a short. If the bar is straddling the line, we get both long and short. All right? Now then, let's move on. I could connect these two together. Let me take off this inflection solver. Let me name that first. Closing price inflection. So I could add both of these together with an OR node. It's essentially showing us the same thing, because not only is this bar, or these two bars, not only are they touching the yesterday's VWAP, but they're also within this range here, right? So it's really not giving us any new information. But let's connect this to the AND node together with this closing price inflection and see what kind of signals we get out of that. So this is every reversal bar that is either touching yesterday's VWAP or is within this range right here. So now let's have a look at the chart. Let's scroll back a couple of days and see if we get any other signals out of this. So we didn't quite get that signal because it wasn't a closing price inflection, because the previous bar was down right there. You see that? So how could we account for that? We could say, let's just add a little proxy for price. Let's say we want to add an SMA 3, and I'll set this to white, and 3. Yes, I'll go ahead and save this. BloodHound Workshop. Session pivots 2014-7. What is today? The 25th. Okay, so that wasn't quite good enough. Let's set it to, say, an SMA 5. I'll explain what I'm doing. I'm going to show when this SMA 5 inflects down as well. That was too much. Let's set it to a 4. Okay, you can see the SMA 4 inflects down right here on this bar. So the SMA 4 is going up, 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 and then it turns down right there at the close of this bar. So let's do an either-or condition. Let's say we want to show either a closing price inflection or an SMA 4 inflection. And I just set that to an SMA 4. Click OK. Disconnect that from the AND node, the closing price inflection. Right, and you can see I already have that condition showing me that indeed the high of the bar is touching the bottom of this range. All right, so I'll add the logic node, the OR logic node, connect these two together, and then connect that to the AND node. So now the short coming from this SMA 4 inflection, it's inflecting down. I'm getting the short from that condition coming through this OR node. Remember, the OR node allows both conditions to come through. And there we have it. So there's a short from what's known as the pivot range. So this entire range that I've shown you, from the central pivot to the directional pivot, this is called the pivot range. So it's just the range around the pivot point. See if there are any other signals. See this right here? This is just a total mess. So how could we account for that to get rid of, some of these really horrible signals here? Obviously, we don't want to go long, short over and over again. So how could we deal with this? Let's say, we only want to take pullback entries. So obviously, we don't want to be taking, let me think about this. Let's say right here on this bar, we don't want to be taking a short right there for one reason, because we've already been coming down for a number of bars. But for another, because it's closed well above, it's closed in the top quartile of the bar. Right, so this is one of the favorite conditions that I have for minute bars, tick bars, and volume bars, is that because this bar is showing so much buying pressure, we wouldn't want to take a short signal there. So let me just build that really quickly and show you that one. So we're going to look at, again, the comparison solver. And indicator A will be the closing price. And indicator B will be the high and the low of the bar. So again, we need the chameleon, SI chameleon. So what I'm going to say is, for a long, the close has to be above the low. Close has to be above the low by 60% or more. Okay, so it has to close, well, let's say 66%. It has to close in the top third of the bar. This one might be a little bit tricky, but once you really, once I kind of show it to you, it'll make sense. It'll make more sense. So we're looking at the closing price and indicator A. If the close is greater than the low for a long, remember, long output, A greater than B. So if the close is greater than B, which in this case is the low for the long, if the close is greater than B by 66% or more, then we allow the long. All right, and if the close is less than indicator B, remember, less than for the short, indicator B in this case is the high, so if the close is less than the high by 66% or more, then we allow the short. All right, so how do I define percentage of the bar itself? We set the small and the large amount to use the ATR function, but set the ATR to a period of 1. So that gives us the range of the current bar. So again, we set the measured in to ATR with a period of 1. So 66%, right? So we just set 0.66. Or let's say 0.67. We round up. Little large and small, so 0.67. So now I'm showing long signals, even if it's a down bar, even if it's a red bar, we're showing a long signal there. Why? Because it's closed in the top third of the bar. Does everyone understand that? Does that make sense to everyone? If it doesn't, just say no, and I'll see if I can explain it another way. But this is really a good price action condition. I've talked about this one before, but this is kind of a common thing that comes up, especially when using tick charts and minute charts. So let's name this close greater than or less than high and the low by 66% or more. So when I connect this now, we get rid of some of those conditions. Not all of them, obviously. For instance, this one. that's kind of a huge bar anyway, so I wouldn't really want to be going short there anyhow. So if we wanted to eliminate this big bar, let's do that now. We have what's called the bar length solver right here. This is a pretty handy little thing. You can do some interesting things with it. So let's connect that now. So right now, you know, stock default, it's eliminating very low ranging bars, very small bars. Okay, but let's say we want to eliminate the opposite. We want to eliminate the large bars. Anything larger than a 20 tick bar, we want to eliminate. So let's set these to ticks, 20 ticks, and then we set this one to ticks as well. So do you see this here? At or above 20 ticks. So right now we are solving for the bars that are greater than 20 ticks. All right, but what we want to do is we want to disallow any bar that's greater than 20 ticks. So we need to change from max to min, the output. So we're going to set this to 0, and then we're going to set this one to 1. So now we're allowing every bar, we're allowing for a trade on every bar that's not a massive bar. Because remember, a lot of times these massive bars, when you see this, it's kind of a psychological psych out. A lot of people, when they see, oh my gosh, it's a big down bar, they all end up going short at the same time, right? And that's usually a very high volume bar, and then it immediately goes back the opposite direction. You know, not always a complete reversal, but enough to scare people out of that trade, and then they're buying back up here where, you know, the large traders are building a short position, right? So it's these large bars that you want to try to avoid trading in the same direction, you know, at the close of that bar. All right, not necessarily always, but in situations such as this, you know, that bar is not breaking out of a range. It's right after the open where the market's just been kind of going sideways in between the value area. Then you get a massive bar. It's kind of psyching everyone out. So we're going to eliminate that bar. And when I connect this now, it eliminates that. You see? So now what else could we do? We could say we only want to take longs above the pivot point, and we only want to take shorts below the pivot point. So we could use a comparison solver for that. But let's show you now the support resistance solver. So I'm going to right click, add the support resistance solver. And this seems like a complicated solver, but it's really not that complicated. Just kind of work with it. Hopefully this explanation will do it for you, but you know, there's nothing like just getting in here and you know, tearing it apart and figuring things out on your own. There's no better way to learn something than to really get in there and tinker around with it. Of course, you need to know, you know, a couple of concepts so that you don't confuse yourself or end up believing something that's not true. So you do need to know the basic concepts, but once you get in here and start changing these numbers around and seeing how the output changes, then it becomes pretty self-evident, excuse me, self-evident how this thing works. So let's add in now. We want to use an indicator. It comes default set to true, saying that it must agree with the swing trend. So that's using a, let me show you, that's using this indicator here that comes with BloodHound. You just briefly mentioned this. So it's the swings, SI swings indicator. Still think these are named backwards. So it's the swings. Let's set it to a double top of 0.25 ATRs and then a swing sensitivity of 3. So what this is doing is it's showing you whether we're making higher highs or lower lows. right? Does that make sense to everyone? See, LH for low or high, HL for high or low. So if we're making a series of higher highs and higher lows, that's telling us that we're in an uptrend. I think everyone in here is pretty much a a regular user that knows most of this stuff. So I'm gonna just kind of get back to this. So rather than saying that it must agree with a swing trend, let's just turn that off and then set use indicator to true, and then add the support, the sessions pivot indicator. Pivots daily, 42, all right? Have to use the intraday close in BloodHound, set it to RTH session. Now I could select all of them, right? But let me select one at a time first. So I'm going to select only the pivot point for right now. And then I'll set this to, I'll set it to ticks so that it's not as confusing. So rather than 4 ticks, let's say we want to allow at least 10 ticks. So this headwind is telling us that we don't want to trade directly into support or resistance, all right? What we're looking for this little system here is actually the opposite, tailwind. But first let me explain headwind. So headwind is saying, it's telling us essentially that we don't want to trade directly into the pivot point. All right, but once we break above the pivot point, then we could allow a long. But as long as the closing price is within 10 ticks of the pivot point, then we don't want to allow a long trade going directly into it. So that's why right here, and let me show you this. Let me mark 10 ticks. So the pivot point here is 102.97. So we'll set it to 102.87. So that's our line in the sand there, exactly 10 ticks. Right there. So as long as the closing price is above this line, which is 10 ticks from the pivot point, as long as the closing price is above that, this solver will not allow us to take a long directly into the pivot point because we're within 10 ticks. All right, but you can see here on this bar, the first tick above the pivot point, because that closing price is above the pivot point, even only by 1 tick, we now can allow a long trade. All right, and then you can see once we actually get below it, then we're allowing both longs and shorts because we're obviously not trading into the pivot point at that point, right? So now let's change this. Actually, I'll leave that. I'll set this to headwind. All right, and then I'll copy that. Add it to the logic tab and set this one to tailwind. So remember, tailwind is showing us when we are basically pulling back to support or resistance and then trading from it, right? So tailwind means support or resistance is behind us, right? So we want to trade with the support or with the resistance. You know, tailwind is pushing us, right? So we're being pushed away from support or resistance. So right here, and let's set this now to ticks. So if we're within 10 ticks, then we want to allow the trade. So if the closing price is within 10 ticks or below the pivot point, then we want to take shorts from that area. All right, if it's within 10 ticks or above, then we want to take longs from that area. There we go. Tailwind, okay, and that's the pivot point itself. So you can see right here, closing price broke above the pivot point, and it's still within 10 ticks. It's actually within 1 tick. So that's why we're allowing a long there. And then here, these bars, the closing price is below the pivot point, but it's within 10 ticks, so we're allowing shorts from this area. And then this one, the closing price, is actually right on top of the pivot point. So it's not allowing any trade because we're right on top of it. Now then, here's the thing. Because this one, this bar, has actually just broken above it, we don't want to allow a long trade on that bar. What we're looking for is a pullback to the area. So we only want to allow shorts because we're actually, we've broken down below it here and then we pulled back to it. So we wouldn't want to allow any chance of having a long trade right there. So what would we do? All right, now think about this. If we had some kind of a proxy for price where we could show that we have a pullback here in price, that price has actually been pulling back, we could show that price has been sloping up here. Right, so we only want to take shorts when price has been sloping up. So we could use this SMA4. Let me show you how you would do that, and then we'll try to use something that's a little more clever maybe. So we'll use the slope, the indicator slope solver, and I'm going to set this to an SMA4. So just delete the 1, click OK, and we have an SMA4 in the slope solver. And you can see right here, it's sloping up. All right, so when it's sloping up, we get a long. When it's sloping down, we get a short. Now, I don't really like this so much. I'll show you how we're going to use this, and then we'll use a different moving average. But what I want to do is I want to get a long, I want to get a short signal when the SMA4 is sloping up. All right, so for these bars right here that we're getting long signals on, I want to actually get a short signal. So I'm going to change the output here. Output in direction, I'm going to turn those to 0 and then show output against direction greater than 0 ticks or more. So you see that, how I switched it? I could have just right-clicked on it and selected not, which would have inverted it. So that would take it back to the original way that it was, but rather than doing that, I just changed the output to against direction. So what I could do now is add this. That really cleans it up enough by itself right there, but what I'll do is I'll show this by itself and then connect this to an AND node. This is the pivots with the tailwind mode and the support resistance solver. And here we have the indicator slope showing us when the SMA4, we're getting a short signal when it's sloping down. When it's sloping up. So if the SMA4 is sloping up, we get a short signal, signaling that we've had a pullback, right? So now I connect this to the AND node, and we're only able to get short signals as we're pulling back to the pivot point. All right, so before, remember, we were getting a long signal on this bar, but we want to disallow that because we are making a pullback from the underside of the pivot point. Now what we could use instead of the SMA4 would be this super smoother filter, which I find myself using more and more. If on my website you upload this this super trend indicator, let me just show you right here, the super trend U11 from my website. when you upload this, it comes with several different moving averages. Right, so this is one of them right here, this A&A Super Smoother filter. So I'm going to add that now. Let's set this to a period of, say, 3. And then we'll say 12, period of 12. Let me add that to the chart now. Let's change it back to 10. So I kind of like this because it does a really good job of smoothing out price. When I'm, trying to kind of show that price is having, it's making a pullback, even though we have a bunch of up and down bars, it's kind of going sideways. I want to show the kind of, general bias of that leg of the market. Then I'll use the Super Smoother filter. Let's set it even to an 8. And I'll make it a little bit brighter. This is just a pretty good proxy for price that I've found. You see how the SMA4 is pretty jagged, and it's sloping up and sloping down, and it's kind of ugly looking. The Super Smoother filter cleans that out. So now let's use that in the slope solver instead of the SMA4. Remember, we used a period of 8. I'll connect that by itself now. So you see that? So when the Super Smoother filter is sloping up, we get short signals, signaling to us that we are making a pullback. Right? We're pulling back up. So when we're making a pullback up, we want to allow only shorts. So now, there we go, you see? And then right here, we were pulling down to the pivot point, so that's why we got that long signal right there. So now what I can do is add this also to our AND node back here. Let's just see which ones we would like to eliminate. This one's kind of tricky because we have made a pullback to the pivot point, but then we've gone straight through it, you see? So if I wanted to eliminate that one, you see adding this slope solver isn't going to eliminate that one. All right, it did eliminate this one here, which is really a bar late. If we wanted to eliminate that, what we could say, let me build this condition for you. It'll kind of show you how to use the Lookback function as well, the Lookback function node. So I'm going to actually show with another comparison solver whether this Super Smoother filter is above or below the pivot point. Right, and then after this, I'm going to plug in to this support resistance solver the rest of the pivot points and show you how that works. So first, let's show whether the Super Smoother filter is above or below the pivot point. And I think this is really just a great way to learn BloodHound and to dig into it, is to just, even if you're not trying to make a system that you can use, but you want to kind of make progress in working with BloodHound and defining different conditions and things, just add 4 or 5 indicators onto a chart, pick out a couple of areas where you would like to take a trade, and then systematically define condition after condition as to why you would have taken that trade there. Okay, and then in doing so, of course, you're not going to make a great system that way necessarily, but you will learn how to use BloodHound more efficiently. You'll learn the process of basically defining the conditions. You'll learn more about logic and how to get your mind to start thinking the way the computer needs to define these conditions. And you'll just get faster and faster at it. That's really what I did. You know, try to define as many conditions around a trade setup as you can, and that will really help you. So now let's add the pivot points. Intraday close, RTH session, and the pivot point. So the super smoother filter above or below the pivot point. Let me connect that and show you. So we're showing whether or not this blue, the cyan line is above the pivot point or below it. So now what I can do is I want to say if the super smoother filter was above it within the past 2 bars, or let's say 3 bars, then I want to allow a long trade. So like right here, you can see we've pulled up above the pivot point and then we've kind of pulled back to it, but then right here it dips below on that bar. You can see it turns red. So the super smoother filter has dipped below the pivot point, still below the pivot point on that bar, and then it turns back above it right here. But because it had only just turned down, it had only just crossed the pivot point, I still want to allow a long signal right there, even though I may not, you know, get one because it actually closed directly on the pivot point, but I want to still allow a long trade there. So how would I do that? I would do that by extending the signal forward a couple of bars. And I can do that with the Lookback node or with the signal extender node. So let's use the Lookback node. Default, all it does is displace by 1 bar. But we don't want to displace it necessarily. We want to simply allow for extending the signal forward. So in order to extend it forward, we set it to max. We set the mode to max. So here I've set it to 3 bars using Lookback mode of max, and you can see we now have both long and short conditions excuse me, on these 2 bars. And then also when it crossed above, you see it crossed above right here? So that's where it turned back up. Well, because the previous bar was below, it's showing us also a short on that bar. So we get both a long and a short. All right, so when I connect it back, this is the original condition. We have a short signal on those 2 bars. But when I connect it, and remember we have a long signal on this one, so when I connect it, we're extending that signal forward essentially 2 extra bars. So it's 3 counting the current bar. All right, and we could do the same thing by using the signal extender, setting it to 3. See, nothing changed. So the max function works essentially like a signal extender, except the signal extender lets you reset the extension. You know, you could have, let's say you wanted to extend it forward by 3 bars unless the super smoother filter broke out below the central pivot. So let's say you would extend it up until the point that the super smoother filter broke out of the range. So you can make a reset for that condition. Okay? So now that eliminated this short right here. So let's name this one. This is super smoother filter above or below the pivot point. That's the short that we eliminated. Because yes, it is a pullback to the pivot point, but it's already gone through the pivot point by so much. So we disallow that. If within 3 bars the super smoother filter was below the pivot point, then we would allow it, but this is 1 bar too late. See? 1 bar too late. And then we have a couple of shorts back here because we're pulling back to the pivot zone. Another short there. All right, we somehow got rid of our short here. Let's see what happened. Oh, because the indicator slope turned down right there. Okay, because the super smoother filter had already turned down. So what we could do in that case is we could allow, because sometimes that obviously that will happen. You know, you can have 4 or 5, as the market's about to make a turn, you could have 4, 5, 6 bars in a row where it's just kind of going up and down and up and down and up and down as it's making that larger pivot. And those tend to be the really larger pivots, right? When the market's going into that chop. That's why it's, you know, it's imperative that you look at a higher time frame if you're day trading. Otherwise, I don't see how you could possibly, you know, well, whatever. So if we wanted to make allowance for that, we could say, well, if the super smoother filter makes an inflection, then we'll allow it if it's sloping against us. So what I would do is this. I would make an if-then condition. All right, so if the super smoother filter, remember this is the super smoother filter, basically the opposite slope. The inverted slope. So I'm going to make now another inflection solver. And I'm going to set the indicator to the super smoother filter. And we used an 8 period. All right, so that's the, I think I already built this, didn't I? Yep. Oh, no, I didn't. I used the 4 period. Okay. So if we get an inflection down, then we want to keep that inflection down. Otherwise, we want to use the inverted slope. So let's see if we can make that happen there. Let's see if we can figure that out. So if we do get an inflection, then that's what we want to keep. So if we get the inflection, then keep the inflection. Otherwise, we want to use the slope, the inverted slope of the line. So if it's pulling back like this, it's sloping up, we get short conditions. But if it turns down, that first bar on which it turns down, we want to keep that signal. That's the inflection. So let's see if that works. That does work to some extent. I guess the same thing in this case would be to use an OR node. Same exact condition, right? So we don't need that if then. That's probably only confuses you anyway. Confused me, so. Now let's see. If I used an XOR, I'm just kind of talking to myself now. Let me think about this for a second. Yeah, in that case it's the same thing. All right. So what we're doing, all we're doing is we're allowing for the super smoother inflection by using this OR node. Remember previously all we were allowing for were short trades when the super smoother filter was sloping up and long trades when it's sloping down, because that's showing us that we've made a pullback, right? But if for some reason we don't actually get the signal until the super smoother inflects down, we want to allow the signal to be on that first bar on which it turns down. So that's why we've allowed the super smoother inflection for that bar right there, because that's the bar on which it turns down. Right? So that should make sense. So now we do get the short signal there. Okay. So now that we've kind of built somewhat of a system here, let's add in a condition using the support resistance solver, but using every single pivot point line. All right, so this would essentially keep us from trading directly into one of these support resistance lines. So what I'm going to do is open up the indicator and select every single line except this directional pivot, because really all that directional pivot is a mirror of the central pivot on the opposite side of the pivot point. All right, I explained that before. Remember, that directional pivot is just the opposite of the central pivot on the other side of the pivot point. So I'm going to take that one off. And when I connect this now, you'll see that this condition, it's keeping us from trading directly into one of these lines. All right, and of course, all I have so far right now is the conditions for an allowance from a trade, for a trade from the pivot zone or yesterday's VWAP. So that's all I have set up right now. So I'm going to set up a few other conditions to allow us to take trades from other pivot points as well. So what this is going to do, this is going to keep me from trading directly into support or resistance. Remember, it's in headwind mode. So headwind mode keeps you from trading directly into something else, a support or resistance line. So let's go back here now. So far, so good there. And let's see. Let's do this. Let me kind of show you how this is working. So remember, we have everything but this DP built into the support resistance solver right now. So right here, remember we're using 10 ticks. Right here we have yesterday's close and yesterday's low. And we're using both of those lines. We're not using this DP line, this directional pivot line. All right, so right at this point, this close is 10 ticks above. Hang on one second. All right, sorry. So this bar, where am I at here? Lost my concentration. All right, right here. Remember, we're not using the directional pivot. So the close of this bar is greater than 10 ticks away from yesterday's close. Let's just kind of, well, let's see here. What do we got? 23 and then 6. Yeah, so that's plenty away. All right, now the close of this bar is 6 ticks away. So we're allowing the possibility of shorting directly into the close. That's why right here we would allow that short, because we have enough room to yesterday's close. But on this bar, we're not allowing that short because there's not enough room to yesterday's close. Likewise, this bar, and this bar, and this bar. All right, but once we break through yesterday's close and low, once we break through it, then there's plenty of room to S1. There's well more than 10 ticks down to support number 1. So that's why on this bar we allow the first short. And then right here, no shorts, only longs, because if we took a short there, we'd be trading directly into yesterday's close and yesterday's low. But we can take a long there because we're above both of these, and there's plenty of room up to the pivot point. So that should be pretty straightforward. And then obviously right here, we can take a trade long or short. You can see we get long or short output because there's over 10 ticks down to S1 and over 10 ticks up to yesterday's low. All right, now right here, for instance, right here we're at S2. So let's kind of consider now taking a trade from, rather than doing a counter trend trade, let's do a short from yesterday's close or yesterday's low, or both of them together. Actually, we could do that. So we could take a short right here. And let me just take Let me just take the markers off. All right, and I'll take this indicator off as well. There we go. Now then, so as we set this up for yesterday's VWAP, we'll set it up now for yesterday's close. So we already have the indicator put in here. So we just need to select the proper plot, which in this case is going to be yesterday's close. And I'll change this to close. And of course, we're going to use a long short modifier once again, set to product, to isolate that bar. What's wrong with me? There we are. And just make sure, yeah, okay. So you see that? So if a bar is touching or within 2 ticks, we're isolating that bar. I think that should be clear by now. So that's why we have to use a long short modifier, remember? That's a very useful tool. You know, the more efficient you get, more proficient you get with BloodHound, the more you'll start to use more and more of these function nodes, because this is really the power of BloodHound, is these function nodes and the logic nodes. You can really, you know, create just about any condition you can think of. Really quickly, I'm sure some of you are wondering what's going on here. Let me figure out a target for this trade. I know you're here to learn BloodHound, but I'm trying to keep track of some things at the same time. I think this will be interesting anyway. So really, I'm looking to get out. If we can hit right there, I'll take 1 off right there. Good. Okay. Now then, we can do this. We can say, let's go ahead and build a few more conditions. So this is high, low to yesterday's close. We'll add a few more. We'll say yesterday's low. Yesterday's high. S1. S1. And then R1. All right, so that's high and low to R1 there. So let's build that condition. Product. And I'll just add these quickly. That's yesterday's low. It's yesterday's high. And that's S1 right there. So I need 3 more long short modifiers. 1, 2, 3. Set each of these to product, remember. Product. product. Yep. All right, we're good to go. So what we can do now is put all of these together with an OR node. Okay, so we have essentially our allowance. This is, the zone that we're trading from. So this is our area from which we're taking the trades. So what I'll do is I'll bring all of these up here, actually put them right here, and then together with the pivot range, so we have the pivot range defined there. We have yesterday's VWAP defined here. And then we have each of the different support and resistance lines. We have yesterday's close, yesterday's low, yesterday's high, the S1 and the R1. Let's go ahead and build S2 and R2. There we go. So this will be S2. And this will be R2. So let me change this one now to R2. Okay. And we're going to put all these together into the OR node. So we're going to allow each one of these areas to be an area from which we can take a trade. And remember, our other conditions are such that I'm going to have to change this now. We'll come back and tackle this in a moment. Bar length, yeah. Okay, and let's just kind of see what we have here now. All right, so we still want to allow this short trade. So the problem with it, it's looking like the super smoother filter is sloping down right there. Let's have a look. No, we get a short out of that. It's sloping up right there. Oh, this one, right. That's the thing. That's what I had done. So I had basically disallowed any bar that wasn't within range of the pivot point. So now let's change this. Remember, this is tailwind. So this is showing us that closing price has to be within, in this case, 10 ticks from the support or resistance line we're looking at. So I've really already defined that the bar has to be within range, within 2 ticks, or touching each of these lines. So it has to be touching one of these, either the VWAP, the pivot range, yesterday's close, low or high, S1, R1, S2, R2. Right? These are the areas from which we can trade. See? So it's showing us all of the bars that are touching. Those lines are that area. Now, if I were to add this solver and select all of those other lines except for this one, let's see the output that we get. Right, so does the close actually touch the low right there? I think it does. The close is 102. Yesterday's low is 102.1. Okay, so it is actually below it by 1 tick. All right, now I think we do want to keep this solver because it's not going to allow us. See, like this bar, this is weird. We should be, how many ticks? Let's see what the close is there. The close is 101.36. All right, S2 is where? Okay, it's 11 ticks. All right, so if I were to set this now to 11 ticks, what if I set it to 12 here? What if it would allow it? Nah, almost. See how it allows about 50% of an output right there? Because it's right in the middle, it's right in between. So let's set it to 12 ticks. So it would allow a long trade there now. But see, that's not exactly a pullback directly down to an area. Let me see what's going on here. May not be able to make it. Yeah, we should. All right. So, let's just add it and see what happens. So we do get a short there, but we're also getting shorts here and here and along here. So if we wanted to add it, if we wanted to add some kind of a an overarching trend condition, like say the super trend or something like that, we can do that as well. Let's do that. But first, I want to see why we're not getting that short right there. So which one of these solvers is not allowing that short? It's probably this bar length solver. No? Yep, it's that one. Because we are now too far from the line. So the close there, 101.51, and that is S1. So S1 is 66. Yeah, so that's 14. That's not... Well... I wonder if I can do this. I wonder if I could displace it by a bar. No. No, because the previous bar is actually the close is equal to S1. You see that? So the close right there is 101.66. And then, yeah, it's 101.66. So it's equal to, so it's not allowing that. What I could do, see, I'm about to get filled right here. Hopefully. So what I could do is use a look back like we did before. Set it to a look back of probably 3 bars max. Yeah. Yeah, let's do that. All right, there, my order just got filled. Let's see what this looks like now. Oof. Nope. Getting out right there. Not bad for a day, huh? All right, so let's see. Yeah, we want to be on the right side of the support and resistance, so we still want this headwind. We don't want to trade directly into a line. But then we also don't want to be taking a short right here when the market is screaming up. So what could we use? We could use any number of things. See, I do like this super smoother filter. You see how it just kind of makes a nice proxy of price. You can get kind of an averaged direction out of it without getting a bunch of chop, up and down, up and down. It's a pretty interesting indicator. Let's add the Chandelier stop, and this is another one that you can get for free from the website. Chandelier stop, let's say 12 and 2. Yeah, so we only want to take, oh no, let's make it a little bit bigger than that. Not quite. Let's give it one more try here. All right, we'll get it. There we go. Good enough. So this is the Chandelier stop. You get this from my website for free as well. And it's essentially using an ATR function. It's similar to a Keltner channel. How can I explain this? Well, I'm not going to bother trying to explain it. You can read a little bit about it on my website. Look it up if you're curious about the the equation and whatnot. So that is kind of similar to the super trend, but you can see here, the super trend will just go flat. It will never move back up. Let's say once it's been going down, it will never start going back up. Right? You can see right here, this one actually does. So as we're pulling back, the Chandelier stop is also pulling back slightly. I mean, it's not drastic, but just kind of ever so slightly. And then you can see right here, it pulls down a little bit as we get this pullback. So it does adjust somewhat for these little pullbacks and whatnot. So I prefer this to super trend personally for some of the stuff that I do, but like anything, it's another indicator. But let's have a look here now. We're going to add a threshold solver because how this indicator has been programmed. We have a separate data series. Let me load this. It's actually a bool series. So let me explain what that is. So we have the Anna Chandelier stop. We have, what do we use? 21 and 2.5. So we have this bool series right here. So what that is, a bool series is a true or false. So if it's set to 1, if it's true, then it's set to 1. If it's false, it's set to 0. All right, so in this case, the uptrend is set to true, which is set to 1, and then the downtrend is false, which is set to 0. So we use the bool series for the trend and the threshold solver. All right, and just very easily, all we do is set 1 for A. Remember, the threshold solver, it has to be in ascending order. So the lowest number here, if you had a data series that yielded a -1 for a short, +1 for a long, you would do it just like this. -1 here, +1 there. All right, but we don't have that or need that, so now I set the long output to 1 and the short output to 0. And in order to get the right 0, not all of these zeros will work. You have to have the 1 right below the 1. So there you go. So that is now Chandelier trend. So when I connect this, we'll only get trades in favor of this trend. See? And really, okay, let me connect this again. All right, you see how this works? All right, look closely. The trend is actually changing on the first close above the Chandelier stop line. All right, but it doesn't show on the indicator until the next bar. So the next bar is where it starts painting the new plot line, the new blue plot line. So if you want it to be exactly like it's shown on the chart, then you just have to displace the indicator by 1 bar. All right, and then it will be exactly like you see on the chart. And doing that eliminates that first bar on which the trend changes. Okay? So that's it. So that was a pretty good exit, wasn't it? Right there. It's a good place to go short, actually. I mean, this is, you know, strong down, A, B, C correction, and then I'd like to see something like that, and then, okay. So not bad. We've got a number of shorts here this morning. Good short there in the overnight, terrible long. One good short yesterday, or yesterday morning. Yep, we couldn't get one here because we'd be trading directly into the S1. But if you would have taken that short, you'd have done pretty well, huh? Of course, that long, you could have ridden it back to yesterday's close and gotten out. I'm just curious, let's test this just to have a kind of a well-rounded workshop. Let's show you Raven real fast. Let's take the chart trader off, and don't you know, I did this little forecast. Don't take that seriously. This is just me throwing stuff up. Who knows what will happen? And don't make any decisions based on anything I show you, ever, because I've blown accounts. Trust me, I know how to blow an account like nobody's business. All right, so of course I'll never do that again, but let's add Raven. Of course, you have to take the chart trader off first, and you have to be connected to a data feed. Then we add Raven. We're going to add the template that we've just built. Yep, all good. New logic. Backtest mode true, yes. I don't know, let's say 3, 1.5, 4, and 2. And then enable it. And let's see. All right, then we just right-click on the chart, go to Strategy Performance, and then click on Historical Real Time. And there is our total net profit, 260 in 5 days. So, once again, not very good. Let's add 30 days and see. No. And then we'll select Morris, the blue red dotted line filter is the Chandelier stop. You can get that from the website, my website. Thanks, Julie. Yeah, I'll send this template out to everybody. So once again, we just right-click, strategy performance, historical and real-time. So for 30 days, 100 trades, $1,200. Now think about that. Okay, $1,200 in 30 days. But there's 97 trades, and you have at least one tick of slippage for each trade. You know, for the market entry. So what does that tell you? That tells you $10. What is 10 times 100? $1,000. You know, what is 5 times 100? $500. So with slippage and commission, you're looking at least $1,500. Well, I have commission. No, I don't. I don't have commission added in yet. That's right. I just reinstalled Ninja. So on a fresh computer. So we don't have anything added in here. So subtract $1,500 from this, and that's what you could have expected to make during that month. So this is not a profitable system, despite what it says right there, because you haven't been looking at slippage and commission. So those are important, and this is not good. You know, you want to see at least above. Well, I don't know. Different people say different things, but I'd like to see at least above 1.6. So that's a good start to a system. I think we've been going for about 2 hours. I'm going to now, rather than take this any further, let's answer some questions if you guys have any questions. And after that, we'll call it a day. So if anybody has anything, you have any conditions you're having a hard time with, you want me to kind of show you how to do anything specific right now, now's the time to ask. Otherwise, if not, I'm going to call it a day here, edit this video, render it, and then upload it, and then hopefully have it done by late tonight or tomorrow morning, probably tomorrow morning or afternoon. All right, Julie, you're welcome. You have a great weekend as well. If there are no questions, then we're going to call it a day. You're welcome, Jim. Larry, you're welcome. Bigger or smaller targets? What do you mean, Bob? You mean, would it be better to have bigger or smaller targets? Or do you want to try something else, you're saying? Let's try something else. Let's just say, yeah, so if you wanted, let's, forget about ATR, let's use ticks. Let's say this is a 3-minute chart, so we need at least 20 ticks. Let's say 25, and let's say 30, and 15 for the stop. Let's say 12 for the stop. And then try that. Hey, Don, you're welcome. You're welcome, Greg. All right, so now right-click, strategy performance, historical and real-time. So that's better. Yeah, so that's actually about $350 worth of real profit. Actually, I'm not going to send this one out. I'm going to keep this one for myself and destroy this video. You can optimize, show you that real quick, because I don't think anyone realizes that we can actually do that. We can optimize profit targets and stop losses. So I'm going to go now to File, New, Strategy Analyzer. Okay, first I'm going to go to the downloader, Historical Data Manager, and I'm only going to do this for 30 days so it's fast. I'm going to download 30 days of CL914. I think that automatically, if they're spliced together, I think that automatically, yeah, I think it automatically downloads the previous contract as well. So let's historical data manager, we're going to go to download, CL914. Let's look back June, what is today, the 25th. We're going to do tick and minute and download that data. Have an active strategy. Yeah, it's fine. All right, so we first have to download the data, which I guess I probably already had, but then you have to disconnect from the data feed to use the strategy analyzer. And then I'm going to show you how you can optimize the profit target and stop loss. And going through that exercise and just doing that, even for basic strategies, will help you to understand that you know, for the market you're using, for the time frame you're using, what's the best size stop and target, because that's one thing I think a lot of people don't really even consider. But there is, of course, for the given set of data, but you know, you can chop it up individually. You can do this past 30 days, then you can do, you know, 30 days ago, 30 days before that, and then you can kind of chop it up and see what the average is. It's usually pretty similar unless you get into a huge period of volatility like we had in 2008 or 2007, 8, and 9. And then, you know, just kind of get a feel for what's the best target and stop for the market and the time frame you're using. So let's disconnect. Of course, it is strategy specific as well, or system specific rather. So we go to CL9, and then rather than backtest, I'm going to right click on it, right click on the instrument, go to optimize, pin it. You see that? You can pin it down right there. All right, then load SI Raven. Add the template. File, this is the template here. Select the entry. Alright, it's saying that we can optimize that, but we don't need to optimize that, obviously. Backtest mode true. So we're only going to use one contract. We're going to use ticks. So I'm going to say, I think it starts with the highest. Yeah, it's what we start with, and then the increment we want to use. No, it's the highest, the lowest, and then the increment we want to use. So let's say we're going to start with, I don't know, let's start with 16. It's pretty low, but it's not too bad. Then we'll go to 40, and we'll say 2 tick increments. So the profit target, we're going to start at 16, we're going to go as high as 40, and we're going to do that in 2 tick increments. For the stop loss, we're going to say, let's start at 8 and go as high as 20, and do that in 2 tick increments. Okay, so it's going to test every possible combination, starting with a 16 tick profit target and an 8 tick stop loss, going as high as 40, and going as high as 20 for the stop. And then we could test the trailing stop as well, but let's not do that yet. We'll set it to a 3-minute chart. June 25th, June, July, yeah. And then we need to set the session template. CL custom, that's important for this. Doesn't matter, but I always set it to infinite. Include commission, I don't have one defined. Keep top 10 best results. We're not optimizing the data series, and we will optimize on the maximum profit factor or total net profit. Let's say net profit, which is pretty much always, well, it's going to be similar to the profit factor. And you could use a different optimizer, genetic, but we're not optimizing indicator values, so that's not going to do anything. Exit on close, true, and then run the optimization. So that's probably going to take about a minute. So we'll wait and see. I'm just going to run and get a cup of water. You guys are welcome to ask some more questions, and I'll be right back. Okay, yeah, this usually takes a little while. I wonder how long it'll actually take. I think I do have a menu that tells me how long. Yeah, see, it's, whew. Oh, there we go. Now it's going. It says 13 minutes remaining. Well, if anyone else has any questions, let's have them. Okay, Bob's asking, this has been one of my best, most useful. Well, thanks, Bob. I appreciate that. Greg says, thanks for the optimizer lesson. I've not seen this in action. Good, good, good. Yeah, I'm not sure how many people actually know we can do that. Thanks, Charles. I felt like I was kind of all over the place, like I was just kind of shooting from the hip, but you know, sometimes that's kind of the way to go about learning, you know, is just start looking at it and figuring things out and piecing it all together. Kind of cool. I was able to take some trades while we're in the middle of it too. If anybody has any you know, any conditions that you're having trouble with, or you want to see something specific, let me know. It's going to be about 10 minutes, it looks like, to see these results. Jim's asking if I can explain my trades. Yeah. Jim Norman is asking, what does optimization do in a case like this? So the optimization is it's finding the best possible combination of our profit target and stop loss. So we've allowed a set of parameters here for our profit target and our stop loss. We're saying the lowest profit target that we want to test for is 16 ticks. Remember, let me see if I still have that open. No, I don't have it open. But the last excuse me, the last back test that I ran on 30 days showed a profit of $1,800. All right, now that was using what was it? I think it was maybe 30 ticks profit target and 12 ticks for a stop. Now previously it was only $1,200 profit. Well, you know, remember that's not accounting for slippage and commission. But I was using, I think, an ATR stop and target. I was using a 4 ATR and a 2 ATR stop. So that was only $1,200. So what this is doing is it's allowing us to find the best combination. So it's optimizing for profit target and stop loss. Our lowest profit target we'll take is 16 ticks. Our highest profit target we're testing for is 40 ticks. All right, and we'll test at 2 tick intervals. So we'll test 16 ticks, 18 ticks, 20 ticks, 22, 24, 26, 28, 30, up to 40. And then for every one of those that we test, all right, that's why it takes so long. It's, you know, kind of to the second power here, right? So it's kind of an exponential. There's a lot of tests it's having to run here. So it's having to test, you know, 8 tick profit target with a 16 tick, 8 tick stop loss with a 16 tick profit target. 8 tick stop loss with an 18 tick profit target, 8 tick stop loss with a 20 tick profit target, all the way up to 40. All right, then it goes to a 10 tick stop with a 16 tick profit, then with an 18 tick, then with a 20, all the way up to 40. Then it goes to a 12 tick stop loss with a 16 tick profit, then an 18 tick, then a 20. So it's doing that in 2 tick increments for the stop and for the target, and it's going to show us the top 10 best combinations. So for this chart, for this strategy, for this 30-day period, it's going to show us the top 10 combinations out of a possible, I don't know, 100 and something. So anyway, that's what that's doing. That's the optimization for the profit target and stop loss, and that's really the most optimizing we can do. We can also optimize the data series. So we could turn this to true. I can't do that while it's running, but to show you. Well, I mean, I guess I could, but it'd probably jack it up. So, you know, we could optimize the data series, say use a 1 minute chart, and then use a 2 minute, then a 3 minute, then a 4 minute, then a 5 minute, and then a 10 minute, and see which one is the best, which gives us the best results. This is a good thing to go through because it kind of lets you know, okay, well, what's the best? You know, a lot of people will just test a strategy and say, well, it's worthless, without testing different combinations for the target and stop. When, you know, most often it's the exit that will make or break the strategy. I mean, the exit is really what's defining, you know, determine whether you're making money or losing money. It's where you're exiting, right? I think we all know that by now. You can have a great entry, but if, you know, you're only going for 2 ticks for your profit target and you got a 10-tick stop, well, you're an idiot. You're losing money, right? So you want to kind of see what's the best target and stop to use with your specific entry. Now, have I used BloodHound with point and figure bars? No, Bob, I haven't gotten into that yet. I haven't done that. I'm sure that there is, I've wanted to do that, and I'm actually getting into that now as far as daily charts, because I think that's where our, I really think that's where our opportunities lie, is in higher time frame systems, higher time frame charts, daily charts, weekly charts, hourly charts, or 4-hour charts or 6-hour charts. Because the little guy, you know, we can't, when we have such a high cost of doing business, together with slippage, it's hard to turn a profit, especially with system trading. I mean, you know, I can do it with discretionary trading all day, every day, but to have something I could just set it and, you know, turn it on and let it ride, well, I say I can do it all day, every day. I can do it all day, every day in Sim. When I started using real money, well, it's been a while since I've done that. I'm still building statistics, so hopefully in a couple of months I'll go back live again. But you know, last time I went live, I did all right, and then when I did poorly, I freaked out, and then went into that, you know, downward spiral, that snowball effect. I got to master that psychological aspect of live money trading. If somebody would just give me $1 million, then I'd be all right. But that is yet to happen. So my last trade, Bob or Jim, was this. That's not it. Bob's asking, does BloodHound work with PNF? Yeah, I believe it could. It could work with any bar type. I just haven't tried it out yet. Give Obama a call. He sure does. I don't think he likes me though, because I'm a contributor to society. Okay, it does work. I got you, Bob. Yeah, I'm gonna look into that. Thanks for bringing that up. I'm gonna look into that. So here, I just kind of let the system run overnight with this volume divergence thing that I had built for everyone. And then here, right at the low, well, I guess I should go into the whole entire routine of why. Well, I mean, you can see here, let me just show you real quick. You see how that other thing is doing. Not quite. Okay. Daily close, yeah. I think I have way too many days back on this chart too, but I'll kind of explain what the reasoning is for this trade. So I was already up a couple $100, and then it's actually a different version of that volume divergence. But anyway, so this was the main trade right here. Forget about all these. These were all automated previously, and then this was the one that was an automated entry, but then I managed it discretionarily. But I had to prepare a little bit for this webinar, so I wasn't paying attention here, because I mean this is a clear, perfect exit right at yesterday's volume weighted average price, right? So I mean these are the exits that I look for, right at the value area, right at the major support or resistance. Because look, you know, back here, not only was it yesterday's volume weighted average price, but see, if I just double click on this, so I'm going to double click on the high, it'll go directly to the lowest point on the chart. All right, but see, that's not the highest high. The highest high is back here. All right, so it's not only the volume weighted average price, yesterday's volume weighted average price, but it's also the 61.8% retracement. This is the zone I look for. Most of my trades is this 61.8 to 78.6. Okay, now what else is it? You see this support zone right here? Yesterday's two major lows yesterday. It's a 5-minute chart, so those are two major lows yesterday. And we broke through all of that and we pulled right back up to it. So this should have been my exit. My stop, my target should have been setting right there. But see, I didn't catch that. So what I did was, and does everybody understand the entry, why this is the entry? This is the volume divergence pattern that I always stress and teach. You see, it's also support 2, right? So it's perfect. I mean, for a counter trend signal, you want to see it from support 2 or below for a good counter trend signal. All right, not only is it all that, but where are we? Should have just used the other chart. Yeah, Jim, I have, but not with real money, just in simulated. So see, it's also, it's not, you know, in the oversold area of the volume weighted average price, but it's down there. The previous pivot was, right? And then the second pivot, see, we have the major volume coming down, then we get the retrace, and then it comes back and it tests that area. Now look at that. Look at where it tests. We have narrowing ranges, right? At least the bodies of the bar are narrowing. So you can see once it gets back into this area right here, this previous area, then the volume is starting to come back in. So there's people buying from that area. Remember before, you had this huge volume bar coming straight down, but that's a lot of limit order buying absorbing that market order selling right there. If I could show you the bid-ask delta, I'd show you that, but I didn't save the data this morning, so I can't load it onto the chart, basically, is what I'm saying. It's not recorded. So once it hit that area, then it pulls back up, comes back and tests that area on much less volume. That's the volume divergence. I mean, we call it divergence. I don't know why people call it that. It's not really divergence. It's just less volume on the retest of the previous swing low or swing high. In this case, it's a swing low. So we have a lower low, but volume is also less. That's volume divergence. That's what we call it. All right. So that's why we go long there, and then I'm holding for a major reversal because we're at what is most often the pivot low or the pivot high of the day, which is after the first hour of trading. Once we get to a nice area of support or resistance and we get this pattern, that's, you know, very often the major swing low or swing high of the day. In this case, it was a swing low. And then we're going up. So I didn't start looking at this until we got to about right here. And then I said, okay, well, I'm going to let it pull back, and I'll buy one more contract when it pulls back to the 61.8, which it did here. And so I bought one more contract there, and you can see why, because it's, you know, this massive bar. Everyone's going, oh my gosh, it's going down, it's going down. So public's going short. People that know what's going on are buying into that bar and then buying into this bar, and then I buy right there. All right, and then it pulls back up to yesterday's close. I go ahead and take one off. Or no, I took both of them off. You guys saw me do that. Then I bought one when it started turning back up off of yesterday's low, and then I bought another one from the VWAP. And then when it turned up from right there, then I got out right where the 100%, and y'all are going to have to send me a check after teaching you this, right where the 100% meets the top of the trend channel. See that? So that's where I got out both of the contracts, and now it's pulling back. So either this is a good place to get long again right here because we have a little bit of buying pressure, but not very much. No, I wouldn't go long here. No way. And you see that volume right here where I got out? That's basically proof that we have a lot of resistance right there. So that's a good place to exit, which is why I exited. Now this is the perfect ABC correction. I'm going to have to start a trading room or something. All right, so now we're pulling down. So if we break through this trend channel and then pull back to it and then get a move down, then chances are we'll break this low right here. But if we don't break through it and pull back to it and then break through this low, then we probably won't break this low. Well, I mean, obviously we wouldn't break that low, but if when we break through this bottom of the channel and we pull back up to it and we don't reject off of it and break through this low, then we'll probably go up and make a new high today. All right, so we don't really have much time. We only have about, what, 10 minutes until the close? Yeah, it's done. It's probably just going to go sideways, and then after it reopens at 6 p.m., then we'll get a swift move in one direction or the other. All right, so that's pretty much my thinking for those trades. And then, okay, so we now just got our strategy analyzer results optimization. Oh, I really am not going to send this to you guys. Sorry. So it's showing for the best one, we're using, I don't even know, what is, okay, here it is, 38 and 20. Wow, so those are the maxes. So I guess if I would have used a little bit higher than that, then possibly I could have received an even better performance result. So you see, smaller stops and profit targets are not really a good thing. It's usually the larger stops and the larger profit targets that end up giving you the ability to have a good backtest result or system or whatever. So if I would have allowed, say, up to a 30 tick stop loss and then a 50 or 60 tick profit target, then maybe my results would have been better. But I'm thinking for a 3-minute chart, this is usually about right. It's usually between 16 and 22 for the stop. For typical trades such as this, like a pullback style trade, and then a profit target of around 25 to 40. Usually 40 is at the high end, so that's kind of interesting. But then again, it is a 3-minute chart that we're testing. Right? 3 minutes? Yeah. All right. So hopefully that makes sense. You guys know how to do that now. Run a little optimization on the target and the stop loss.